And we are live. Welcome to another episode of Unscripted. And David Anson is again on the show. Thanks very much, David, for joining me. How are you?
Of course. I'm so happy to be back, David. Happy New Year.
Yeah, likewise. And I reach out to you specifically because every once in a while there's a monumental event that happened. In this particular case, it's in the kind of cyber insurance space.
Yeah.
And and it's funny because sometimes it goes under the radar. Some people know about it, some people don't. And I couldn't think of a better person to discuss this other than yourself. I wanted to bring you up, and when do we get going? And the event I'm talking about is specifically about the recent verdict or
That's settlement, David. Settlement.
Sorry. Settlement for the devil's in the details, as we know. Maybe to start and clean up palettes, what do we know from the incident? Because it's been going on for a while. When we talk about Merck, and what do we know from what happened and maybe the things floated through? Because it's been the litigation has been ongoing for quite some time.
Do we want to set the scene for viewers that may not know what prompted the litigation real quick?
Yes, that'd be great. Litigation 101 in regards to Merck and the coverage associated with it.
Yeah. In the summer of 2017, a Ukrainian, I believe, finance, accounting, document management system that all enterprises in Ukraine, David, that were required to use was infected through a zero-day or backdoor vulnerability by a then unknown actor. And it spread out a ransomware infection that was now called NotPetya. It was a very destructive ransomware code. In the specific case of Merck, I think 10,000 computers were infected within 30 seconds, 20,000 machines within 5 minutes, and ultimately over 40,000 machines were bricked, useless, as a result of the attack. Merck was one of hundreds of companies around the world that were crippled by this attack. I remember the day specifically because I was in London at a cyber meeting, and it was the end of the day in London, and a couple of my underwriters and I were at a happy hour, and everyone's phone just blew up, and we all just, oh my God, what is going on? Anyway, that cyber attack resulted in massive disruptions to Merck and the other companies that were impacted, ability to produce, deliver, ship product, manufacture product, etc. And these companies looked to their insurers, to back the loss. A lot of claims came through cyber insurance, not as much as would today because the product wasn't quite as saturated in the market, David. So a lot of people relied on their property policies. And I'm going to proactively ask for your forgiveness about how much in the weeds this goes, but here it is. Property policies are generally written on an all-risk basis unless they're written for a specific reason, like California earthquake or Florida hurricane. So a property policy should cover any damage to your property and resulting business interruption loss that you incur because of that event. Before NotPetya, before this claim worked its way through the court system, almost all risk property policies affirmatively insured computer systems non-physical damage. So your systems, your networks, and the data that were in your enterprises was considered insured property within your policy. And when those data, computer systems, and data were impacted, the property policy would pay. In other words, property insurers hadn't thought about the systemic, wide-reaching risk that they were actually insuring. And so Merck filed a claim. The insurers, and this might not make me a popular person, I don't BS, so here it is. The insurers didn't really have an effective cyber-related exclusion on the property policy. There was none at all. So the only exclusion that they were able to rely on in order to not cover this loss was to trigger the war and warlike action exclusion. And so thus we have what we in the business call a coverage dispute. I'll stop there and let you tell me what direction you want to go in. I'm pretty prepared to go in whatever direction you want to go to. I think there's a lot to talk about coverage. There's a lot to talk about why insurers did this. They're not monsters. There are reasons for it. and what your listeners can think about going forward. So you drive, David, please.
Yeah, absolutely. Let's first of all start pulling the thread on the sweater.
Okay.
So, first of all, for the people that are not aware, Merck is probably the largest shipping company in the world. Is it?
That's Merck.
no,
Merck is
Merck,
one of
sorry.
the largest pharmaceutical companies in the world.
Pharmaceutical. That's right.
Yeah,
The
but
one-
Merck was also impacted. Mondelez was also impacted. So many companies.
That's right. And Merck had another incident. That's why I'm like confused with the name. But we're talking about from a monetary perspective, the impact was what? Do you remember the numbers?
They claimed, I think, a little bit shy of $1.5 billion in losses. And just for everyone on the video to know, it's not unusual for a global multinational to have a multi-billion-dollar property policy. They have billions of dollars in assets, buildings, property, plants, and equipment. They claimed roughly $1.5 billion in loss because of NotPetya, David.
That's right. And specifically, the catch-all phrase under the kind of the property liability policy was something that was pretty common back then. So as you mentioned, it was most, if not all, property insurance property coverage included that
computer systems, non-physical damage loss.
Correct. And so I'm assuming that there was a lot of internal consideration in terms of how do we interpret that language. And it's amazing because I'm assuming there's going to be a lot of brain power and a lot of people that make a lot of money sitting around in a room trying to legally interpret what's included in that. And first of all, it's amazing. 2017, we are what, 2024?
But yeah, 7 years later.
Unbelievable. Imagine how much was the claim total? Like, do you think that they negotiate, like how much it cost to settle this in court?
You are definitely talking, David, millions of dollars in legal fees, probably absorbed by both sides. So in a contractual dispute like this, but there's $1.5 billion at stake here. Throw in some millions of dollars into, what's that?
And the $1.5 billion, so go ahead. And the $1.5 billion, the claim, was that to cover what type of losses? Operational losses?
Yeah, it's amazing. It's actually, David, in 2024, with cyber insurance being more sophisticated, I can't think of a more plain cyber attack in terms of how it would have been covered, right? You needed to restore systems.
So, David, coming back to as you mentioned, that the losses associated were operational losses, right? They had to restore the system. They had to get back on track. So,
yeah,
quite a huge amount. It's still quite a massive loss.
Before we pause for a second, I was starting with the fact that you really, in the grand scheme of things, you could not pick a more standard textbook cyber claim from a cyber insurance policy. We can go into the details of why this was on property later, depending on how far you want to go. But losses are huge, David. When you have a cyber attack that cripples 40,000 machines, and I would assume, based on my interactions with my pharmaceutical clients over the years, there's temperature-sensitive product, there's time-sensitive product, there's a huge logistics effort involved to get all of these little medications distributed all over the world. There's finance systems, there's accounting systems, there's vendor systems. Imagine if you think about running a household, you have a kitchen with 4 appliances, you have a laundry room with 2 appliances, and you have a bathroom with, let's call the bathroom plumbing appliances, just for sake of argument, right? If you lose just the plumbing because your pump went down or the city was unable to run the sewer, every other ability for your house to function is gone. The dishwasher doesn't work, the ice maker doesn't work, you can't cook, you can't do laundry, you can't shower. When you have a catastrophic event like this, where not just one point of failure, one critical point of failure went down, but I would assume, based on the severity of the claim, multiple, if not every critical point of failure went down because of this ransomware attack. 1, you're down for weeks. When you're a company, just for the sake of simplicity, if you generate $50 billion in revenue a year, if you're down for 2 weeks, you have already lost several $billion in sales. When you compound the expenses to restore all the different parts of your system, of your environment, of your enterprise, with the loss of the ability to sell goods, and remember, pharmaceutical companies may have unique, very specific pharmaceuticals that are patented, and they may manufacture generics. If my pharmacy says, oh, this prescription is not available from Merck, they're going to go to one of their competitors, I'm never going to go to Merck again. I actually didn't even make a decision, David. I didn't even see that. Merck says we can't send you blood pressure medications that are generic, go to someone else. So they permanently lost that month's sales. When you look at an organization from that picture, it is very clear how we can rack up a multi-billion-dollar bill in a matter of days.
And this was not the first time a ransomware happened. And it's really interesting that it took such a large scale incident for all the eyeballs to be on it all of a sudden, because the insurance business, we talked about this, is really traditional and slow to move. And I'm just going to leave it at that. Maybe you can comment on the fact that there was something to be done prior to, but nothing typically is done until something like this happened, which is massive.
Yeah. So the specifics of this case are so important. The fact that it went to a settlement is anticlimactic, and that's just the nature of the beast with litigation. No one wants to plant the flag in the ground. But the NotPetya was so widespread in terms of its losses, David, that all of the insurance companies that were involved in this litigation, I guarantee you, I'll bet you any sum of money, were also involved in claims from this same cyber attack for other companies' policies. So you have a widespread event in which multiple insureds are going to the same insurance company to seek collection. This can inflict huge damage to insurance company solvency. Another similar example to that was after the attacks of September 11th, many insurance companies went under because there were so many different properties involved when those losses paid out. And frankly, sadly, there were so many workers' compensation losses that were paid because of the deaths that companies went insolvent. When you have a widespread systemic event like this, it can really impact insurance companies' solvency. They don't keep 100% of the premiums. They're like a bank. They keep 10% and then you put the other 90% of the money to work. We have a systemic event, which is what makes this a very unprecedented situation, and why the insurance companies decided we're going to pick this fight and we're going to deny coverage and we're going to see where it goes. To your point and to your comment 30 seconds ago, the insurance industry is slow to move. When I read all the briefings again in preparation for our meeting today, which is a great way to start the day if you're me, my God. The judges in the New Jersey Court of Appeals, ultimately the last court before the Supreme Court, which never heard the case because they settled, the judges sided with Merck, stating, we have known about cyber risk for years. I'm paraphrasing, so no one kill me. The insurance companies have known about cyber risk for years. My perception, David, in agreement with the judges, is the same insurance companies that are trying to deny coverage under this policy underwrite cyber insurance. They affirmatively sell cyber insurance. And if you're going to trigger the war exclusion, why isn't the war exclusion contemplating any cyber acts? In fact, why isn't the property policy in question addressing any cyber risk, either affirmatively covering it or affirmatively excluding it? When you look at a property policy, David, there are very clear exclusions to systemic problems. No property policies cover nuclear events. No property policies cover loss from asbestos. No property policies cover or liability policies cover things like opioid after what we saw with the recent opioid litigation. So there is precedent to an insurance company identifying a specific risk, deciding it's not insurable, and excluding it. And basically the judge said, if you're telling us now that this risk was so uninsurable, why didn't you exclude it? Right?
Yeah. And let me ask you this: systematic risk, right? Sometimes the government steps in. Like in the case of September 11th, you're right. The government stepped in was funding associated with. One can argue that because it's so widespread, it was systematic risk associated, and it's cyber attack. You can mention, they claim it was for a nation or whatever the case may be. Why in this particular case, the government did not step in and say, hey, we'll cover it?
That's a really good question. And my answer, unfortunately, is going to be a little bit high level. Government has, over the last decade, David, really tried to avoid regulating cybersecurity requirements. Although the very concept of regulation is at the temperament of the administration in power. You could argue that with the previous administration, when this occurred, there is more of a laissez-faire perspective on business. And if you knew of your business risk, you should have protected against it. Obviously, to your point, David, and you're absolutely right, cyber is a horrifically systemic risk. And despite people doing the best that they can to prevent cyber attacks, they're going to get hit. So we are seeing a lot of noise around lobbying efforts to put in some sort of stopgap measure in place for catastrophic cyber risk. We are seeing insurers start to really be vocal about the fact that if a NotPetya type attack happened today, with the volume of cyber insurance buyers now versus 7 years ago, you would probably see some insurance companies fail, which is why you've also seen, as a result of this NotPetya claim and all the other claims that occurred in this time, NotPetya WannaCry, David, you are seeing insurance companies now absolutely, very clearly in black and white, excluding this risk. I don't have an answer as to why it didn't happen in 2017, but I will tell you that lessons were learned and people are paying attention to it now. Frankly, yeah, TRIA was the same. TRIA was a byproduct of the tragedy of September 11th, where the Terrorism Risk Insurance Act didn't exist before 9/11. And so people take action after they've learned a hard lesson, David.
Yeah, and insurance companies definitely stepped up their games in all aspects. And it's amazing that they settled, because I suspect that the ramifications of actually coming to a verdict would be so wide. And I'm sure everybody knew what at stake here. It wasn't just this particular claim.
So
it was impacted the entire industry.
100%. And I will tell you that the specter of the danger of the precedent that could be set from a verdict for this specific situation, David, was so bad that insurance companies globally addressed systemic cyber risk and cyber coverage on property policies almost immediately. They started working on it. This decision with Merck be damned, because the policy was written in 2017 and that's a snapshot in time. Going forward, we saw insurance companies change everything about how they looked at cyber risk. And if you would indulge me a couple minutes, I'll just break it down for the viewer so that they know what we're talking about. And I pulled up a bunch of notes, so I'm going to be wiggling with my mouse here.
This is perfect. Thank you. For all those listening, this is the perfect way to. So we have to thank David for doing the research and being on top of things. So it saves you. First of all, for anybody who's trying to understand this on their own, good luck. So this is the perfect way to learn about the ins and outs of something that's monumental to cyber insurance and cyber industry and overall. So thank you for doing that.
Of course, my pleasure. So I'll start off with the wording that led to the claim, right? When we look at the situation with Merck, we basically had an affirmative coverage for property damage loss and resulting business interruption costs, even if the loss was computer systems and non-physical damage. So that basically means property policies used to cover cyber attacks. Since the Merck situation, and frankly, many more, WannaCry as well, it's not just Merck, I don't want to isolate them here. Insurance companies have addressed cyber risk on their balance sheet threefold. First of all of the large global insurers in the US and in Germany specifically, the reinsurers, went on an endeavor to eradicate silent cyber from their balance sheets. What that means is, if we have an insurance policy that has never contemplated cyber risk within what is covered, and we now have discovered through researching it that there is an exposure to cyber risk, we're going to exclude it. For example, a stock throughput policy basically ensures that your raw materials get from start to finish line without being lost or damaged. As you can imagine, food, chemicals, temperature sensitive raw materials need refrigeration. It's 2024 now. Most of those refrigeration, especially at an enterprise level, are remote controlled. If you had a cyber attack break in and change the temperature on raw chicken or raw beef, you have a spoilage event where there was no fire, no earthquake, no vandalism. Someone just came in and changed the temperature and your millions of dollars of chicken went bad. Now, all of the insurance policies in the marketplace, generally, there are some exceptions, are excluding loss for an otherwise covered situation like spoiled raw chicken if the chicken was spoiled because of a cyber attack. So they have eliminated coverage for any loss arising out of cyber risk. That means, go ahead.
And if we just go on a quick tangent,
Let's do it.
in actuality. So I'm assuming in my mind, all of a sudden the insurance company starts sending letters to their clients saying, hey, by the way, we are now modifying the terms and conditions of your property insurance. Or they would say when it's coming out for renewal, they're going to say this is exclusion, or they didn't say anything. They just send you a new policy saying these are the new terms and conditions.
Yeah.
You want to read it.
There are 50 different states in our precious union with 50 different sets of insurance laws. If you're buying insurance from companies outside of the United States, like Lloyd's of London or German reinsurers, a whole different set of insurance laws applies. All to say, David, some people may have been told, some people may have not been told. Some insurance companies were obligated to notify their customers in terms and conditions, and some, frankly, were not. That goes down to one basic fact, and this is the only shameless plug I'm going to do, which is your broker is the person who should be telling you when these changes come and helping you navigate the changes. But yeah, there's multiple different situations with how people learn
David,
or didn't learn.
You beat me to it. That's why I was teeing you up for this.
Oh no.
And I'm telling you, it's magical. It really is. Imagine somebody tried to, because this is not the first and the last time monumental changes are going to happen. This is a fast moving target.
Do you want to talk about how many different COVID exclusions now exist on policies that people weren't told about?
Yeah. And how do you navigate in these precarious waters without having a trusted advisor on your side? It'd be crazy to do this on your own.
Thank you. That's kind. I will say this. One, generally, in the eyes of the law in this country, the policyholder is responsible for understanding the content of the policy. It's very difficult to bring a bad faith claim against an insurance company. And it's very difficult. It's not very difficult, but it can be difficult to point the finger at your broker by saying, you didn't tell me about this. There are situations where the broker omits information all the time and it's not good. And those claims ultimately are usually settled in the favor of the policyholder. But really, it is your responsibility to know what your policy says. And all that is to say, David, since the silent cyber exercise has permeated through the global insurance industry, we have two new really exclusionary strategies that insurance companies are using. One, property insurers, like the ones that were tagged in this claim in the Merck situation, absolutely do not cover your computer systems anymore. There is a very clear black and white exclusion in some form or another on your property policy that says insured property does not include electronic data. Have a nice day. They took it out of the property policies, and the only other place that you can get that coverage, which logically would be a cyber policy. Cyber policy literally only insures electronic data, right? They pushed it to that. Go ahead, please.
No, and you cannot call your insurance company to say, hey, do you mind to get added on to my property? I cannot go back to the same and say, hey, do you mind adding, having I'll pay extra premium for it, but this does not cover. So
I'm gonna let your viewers in on a dirty little secret, and this will definitely get me some hate mail. If your property policy affirmatively covers electronic data or computer systems, I will bet you a cocktail of your choice, David, that it's a very small token sublimit. So let's say Merck is buying $1 billion policy now. I don't know what they're buying, so this is speculative. let's say they're buying $1 billion policy. I will bet you that their property policy does cover computer systems non-physical damage, but it's limited to $5 or $10 or $25,000. Do you know why that matters? Because the insurance company said, we told you we were only covering $20,000 of this loss. We've cut the check. There's no other room in the policy to negotiate. There's no ambiguity. So generally speaking, there will be a very clear electronic data exclusion on your policy, or there will be a tiny token sublimit which the insurance company can point to and say, oh yeah, it was covered. We paid our obligation, which was 0.5% of the policy limits. Property insurers are excluding computer systems damage. We've also seen an evolution in the war exclusion, David, where this was the crux of this case, actually, in terms of the judge's decision that led to the final appeal, which led to the final settlement. You said that insurance companies are slow to evolve. We talked about all the other risks that they exclude very clearly. They didn't exclude cyber or war. When there is ambiguity in an insurance policy language dispute, the general sort of way that judges and courts address the issue is to say the most basic, plain sense of the language is what will guide us in terms of reaching a resolution here. The war exclusion on the policy that was in question was a war exclusion that has largely not changed since 1930, when insurance companies started putting on standard war exclusion language because of the Spanish Civil War. And so
let's not sink in. We have to have 20 seconds of silence after this, just to let people sink in. You said 1930?
1930. 1930. When insurance companies realized after the First World War that mechanized war and tanks are going to be the future of warfare, not pistols and men, right? That exclusion hadn't changed in roughly 100 years, 90 years. And so you have to look at that language in the context of when it was developed. And really, it didn't contemplate cyber risks. Whether or not you think that it was a warlike act, and whether or not there was a hostile actor involved, frankly, there was, David. There was members of a GRU, I believe, that were arrested in association with NotPetya. So it was a Russian military act, whether you like it or not. Russia said they weren't involved. These guys, this and that, they did it on their own. But the exclusion itself wasn't intended to address cyber risk, and the policy didn't mention the word cyber risk anywhere else except for affirmatively providing coverage for computer systems on physical damage. So now all policies generally, with few exception, will have a war exclusion that will include cyber war. Cyber war is generally going to be defined as any unauthorized access or malicious use or malicious leverage of computer systems or electronic code to cause damage to the insured's network, whether war is declared or not. And where we go back to your broker matters, some insurance companies are trying to push language where the exclusion is open to attribution, where it basically says, we, the insurance company, are going to decide at the time of the claim whether or not we think that this is an act of war. And an act of war is defined as an act by a nation state or any of its proxies. What the hell does that mean? And so there are multiple different war exclusions everywhere. And it's important for the viewers to understand that when you look at your war exclusion, specifically when you look at your policy, I guarantee you there's a secondary clarifying cyber war exclusion. It's important that you understand how the insurance company is going to adjust the claim. Who decides whether a nation state was involved? Who decides whether that proxy or that surrogate of the nation state was actually sponsored by the nation state? We've had a couple of insurance companies that will go nameless, but I very much disagree with this, so I'll take a stand, damn it, David. We've had insurance companies say in discussions that we would like to mention America, Canada, Australia, Great Britain, and a couple other Western powers. If they declare a cyber attack an act of war, then it's excluded. How does that work? You can't even attribute sometimes who perpetrated an attack, let alone whether it was a nation state or not. There is a lot of inconsistency in the market in terms of war exclusions, cyber war related exclusions out there. So it is imperative that everyone understands what that language is. And if you don't like it, there's probably a better alternative out there. But the insurance companies learned a very tough lesson here, and they did all these changes after Merck, especially because the decisions that were coming down the pike for Merck historically were not in favor of the insurance companies. It wasn't looking good.
No, absolutely not. And it seems like almost the insurance companies have covered their tracks like two-pronged, right? Is by the definition of the war and then what is considered an act. And those are loosely defined. And then as you mentioned, you ask yourself, who is making that decision? And then after the fact, okay, what do we do next? And so let's say I'm an enterprise or I'm a medium-sized business and I'm looking to get myself covered. What I hear from you now is very disconcerting, because I know I have this risk. And frankly, there's never in human history, let's say a company was able to get shut down globally by just creating some sort of code malfunction. It was always localized. There was even if something went off, like you cannot. So you
have an earthquake in California, the plant in Texas turns on. It's fine.
Yeah, the associated risk associated with not having operation at all, even for a single day, is monumental, and it's from an impact perspective, from a monetary perspective, is huge. And not even that, is then what's going to happen with your supply chain, as you mentioned. What if you supply to another company? And what if you have guaranteed in your insurance, in your contract, that you're guaranteeing to the impact and cascading effect was never before something that happened. So I'm listening to this and I'm saying, okay, this is very disconcerting. From one side, the impact is monumental, almost like completely, you have inability to protect yourself from a disastrous consequences. And on the other side, you have the insurance company being, hey, you're on your own potentially.
So that's a really good question. I didn't mean to be disconcerting, although anyone who's ever listened to me speak publicly knows that my nickname is Doom and Gloom David. Well, I don't know what to say. Well, there's two things we need to think about, and two things that I advise my clients to think about. One, you need to operate under the assumption that your property policy and all the similar things like stock throughput and product recall, all those, is probably not going to cover destruction to your property and finished product because of a cyber attack. And so if we have an exposure, if we're using industrial control systems, if we're using operational technology, automated manufacturing, remote monitoring for environmental and temperature, refrigeration, etc., you are exposed. You are absolutely exposed and you are at risk. And so one of the good things about the property policies deciding not to cover cyber risk was that a whole new market emerged for cyber physical damage, David. And there is a way to cover physical damage loss arising out of a cyber policy. I know everyone's going to roll their eyes up, another insurance policy. Yeah, I don't know what to tell you. It's how the cards fell. I didn't make that choice. And so if you are exposed to real physical damage to inventory and stock because of a cyber attack, you need to talk to your broker about purchasing a cyber physical damage policy. There's major insurers in America, there's major insurers in London and Germany that issue cyber physical damage policies. So it is coverable. There's no reason to throw up your hands and say, we don't know what to do. The question about the actual insurance company making a determination about war is far more complicated. I'm not one of those people that will broadcast platitudes for the sake of making you feel better, obviously. A lot of these new war exclusions that are out there, these new cyber war exclusions, that are out there are untested. And it is incumbent upon you, the policyholder, your viewers, to work with your legal counsel, to work with your internal finance teams, to work with your insurance broker, to understand what cyber war exclusion best fits your risk profile. If you're a multinational company and 50% of your operations are on the NATO border, you really need to think about what your cyber war exclusion looks like, right? If you are a dairy farmer, I'm at my farm in upstate New York, which is all dairy. If you're a dairy farmer and you're in the business of milking cows, I don't necessarily think the cyber war exclusion is a huge exposure to you, but ultimately the onus is upon you, the policyholder, to understand what your exclusion is. The extra sort of layer that I will put in there, and I always put this out there publicly, it is your insurance broker's fiduciary responsibility to help you understand these exclusions. That's literally the only reason we exist as a middleman, is to help you understand that. So you should challenge your broker to help you understand, where there are gaps in your coverage. And if those gaps align with one of your risks, you have to address it. You absolutely have to address it. At the same time, the strategies around network security and resilience and tabletops and ransomware preparedness and MFA and all of that is still there. The best way to protect yourself from a cyber attack is to prepare yourself and keep people out and be resilient. It's a multi-pronged approach that you have to look for, but the actual war exclusion language that's now on policies is going to go through the same type of growing pains and testing in the court system over the next 10 years. And I'm telling you, the geopolitical landscape is only getting worse.
Yeah, absolutely. And companies, including insurance companies and underwriters, have become better in quantifying the risk, right? We started to get way better than we did back in 2017. With that said, since they're better quantifying the risk, they can better zone in on the amount of premium you have to pay to cover yourself. So let me ask you this: how much coverage do I need for? Because that's also a big question, right? So
for New York Information Security Group, I'll sell you a $1 billion policy, David. That's what you need.
but seriously, like, how much? Because again, it's
really good question.
Because a lot of companies say, okay, I'm buying a policy, but then when something happens, they realize that the cost associated with restoring is triple, if not 10x what they had coverage for.
It's a little bit of art and science blended together, David, I'll tell you. You need to understand how much of your actual income generated as a business is derived from products that require automated manufacturing or products that are exposed to cyber risk. So let's say, for the sake of argument, we have $100 in income. Okay. $20 of that income is from actual people actually painting cars. There's no cyber risk. $40 of that income is from programmed machines, industrial control systems, moving the panels along the assembly line. And those panels are monitored, those machines are monitored remotely. So we now know that $40 of our income, of our $100 that we generated income, is exposed to cyber risk. At the same time, we also know that it cost us $75 to build all these very bespoke, specific assembly line widgets and gadgets and devices. And in order to rebuild those devices, if they were bricked or wiped out, it's probably going to cost another $75. So now we have $115 in risk that we're taking on. We also know that we rely on several third parties who may rely on automated manufacturing to get us some of their widgets, and those third parties are responsible for another $20 in income. We now have $135 in income. It really isn't, I hate to say this, it really isn't difficult to quantify how much cyber risk you have associated with physical damage loss. It's a matter of understanding where those exposures are. As you said, the devil is in the details, and spending the time to understand it. I work with my clients hand in hand to do this. It is not the most time-friendly process. It takes some time. It takes some hours of work, but you only generally need to do it once unless the business materially changes, David. And so if you look at how you're generating income and you look at the value of all the equipment and property and plants that are exposed to cyber risk, that is a pretty good bellwether about how much limit you should be buying. Your limit that you should considerate, the limit that you should consider for cyber physical damage is almost certainly going to be less than your global property limit. And just so everyone knows out there, the cyber physical damage policies, which are very unique and standalone and have a very slim area of coverage, are not horrifically expensive. They're not. They're going to underwrite to two things: your actual property statement of values, which you have because you buy property insurance, and your cyber risk controls, because ideally you have cyber insurance, so you've already undergone that. It's not extremely difficult to understand what your exposure is, and it's not extremely difficult to get that information to these underwriters to provide coverage. It's just a matter of spending additional time and a little bit of resources to do a little bit of math and come to those conclusions about how much we should buy, which I frankly have been helping my customers with for 10 years because I knew that this was going to be an issue a long time ago. So I care about it and I built a process. That being said, once you're done with that, it's on autopilot year after year. And you can really address it with the coverages that are out in the market. There is absolutely a way to address it. It just requires a little bit of elbow grease, and everyone hates insurance. And I know that no one likes insurance, but you only like it when your building is burning and then you call me. I get it. Give your broker a couple extra hours to get this sort of analysis done with you in partnership with your finance people, and you will be far better prepared when the claim comes in. Because David, we are seeing ransomware attacks. We are seeing these very toxic attacks and events come in, and they're crippling assembly lines. They're destroying raw product. They're doing a lot of damage in the real world, which is something we did not think about before NotPetya, WannaCry, that sort of scourge that came out back then.
And what about liability to your customers or clients? For example, if a breach happened and their data is being lost, or now they're getting hacked because of, that's the problem with quantifying that risk. You have residual risk, almost collateral damage of information leakage. How do you quantify for that?
That's actually been worked on for years. So it's less novel to understand your non-physical damage cyber risk, right? Generally speaking, there are statutory requirements in this country and in Europe, around the world, tied to a data breach event. So you need to do this when a social security number is compromised. You need to do this when a healthcare record is compromised. If you're sitting on 1 million records, you just multiply it by the average cost to address those situations. And that's the limit that you should insure to. You add on to that, David, your business interruption exposure. Business interruption from a cyber perspective, leave the physical damage out. Business interruption from a cyber perspective is actually fairly straightforward. If I'm generating $365 million a year in revenue, and my CISO had a really hard think about it and said the most catastrophic cyber attack means that we're going to be down for 1 month, then I need to buy $31 million of cyber insurance, right? So those data points around the non-physical damage are a little bit easier to come to in terms of a recommendation. There's tons of loss models out there. There are tons of projections that we can use. The physical damage is where you really have to get your elbows in the weeds and pull up some Excel spreadsheets and do some math.
But it counts to the overall risk, because then, as you mentioned, a bit of work up front carries some tremendous dividends afterwards.
Yes. What is the old adage? An ounce of prevention is worth a pound of something. Lessons learned. I don't know.
Cure, right?
Yeah.
Out of cure. That's exactly it.
Yeah.
And I also want to mention something that we discussed this in the past, that it's really partnership, right? Even though nobody likes insurance, the insurance company has, and you're a great picture of that. They have the greatest incentive for you to not get hacked. So you continue paying the premium. So it's a partnership, right? So it shouldn't be a conflict of interest, because there isn't any conflict of interest. You have to work with your broker. You have to work with your insurance company to make sure you have the right coverage.
Yeah.
And then let me ask you this. Our insurance companies are, because they're partners, they're helping their customers become more secure, right? They're providing incentives in forms of discounts, I'm assuming, or at least maybe increased premium, or increased coverage associated with maybe potential better controls over from a risk perspective, right? Is that correct?
Yes. Discounts have gone away, but what I will say is, if you are able to leverage, let me rephrase that. If you are
gone away, but at least you're getting insured. I heard companies walking away.
That's ultimately what I was going to say, David, which is like, tasteless, but it's in the reality. Either you have enough controls to get insurance or you don't, right? But a lot of the insurance companies now have really ramped up the sophistication of their pre-breach services. So they will do an accounting exercise with you to understand how to survive a ransomware attack. They will review your disaster recovery or incident response plans. They will review your privacy policy. They will provide subsidies and discounts to buy certain widgets, not premium, but to buy certain widgets. There's a partnership there. I'm going to take one step back. I know we're running out of time. I just, in defense of our friends, the underwriters, the NotPetya situation was a very dangerous claim for the insurance industry as a whole. And I think that sometimes gets lost on people who love to say, damn the insurance companies. They did not, to their own error and their own risk, contemplate how much cyber was exposed within their portfolios. They have now repaired that risk to protect themselves and ultimately their policyholders, because David, an insolvent insurer does no one any good. Now they have affirmatively put out products that affirmatively cover the risk that was in dispute in this Merck situation, and they are affirmatively paying loss on those policies as well. The insurance companies learned a hard lesson about ambiguity, but then they also turned it right back around and started offering a product that affirmatively covers it where there is little risk of dispute around the physical damage. The war exclusion itself should be an interesting thing to watch. And I think it's also a side effect of the world generally going in the wrong direction the last few years. But generally speaking, the insurance companies want the policies to work. They want the policies to function, and they want to remain solvent. In their defense, this was a tough lesson that they learned, just like it was a tough lesson that they learned after September 11th. No insurance company, David, ever thought about how many employees you had in one zip code that you were insuring against life insurance loss until September 11th. Lessons were learned. And ultimately, insurance, as much as people begrudgingly roll their eyes at it, is very important in terms of businesses insuring and protecting themselves. And as I say, I came up with this one myself. Insurance is a river on which the economy flows.
It's very true. We need it for commerce. There's no two ways about it. How you can't, because the idea is that you continue to do business even if something happens, and you can't self-insure.
You continue to pay your employees, and you continue to provide life-saving medications and keep food on the shelves for the public.
And so before we wrap up, I wanted to ask you this. So you say a good agreement or a good negotiation is where nobody's happy leaving after they go to do you feel, so let's talk a bit about the settlement. Do you feel that's the case? And what's your take on it, just from looking at it and understanding how everybody walked away from this?
Oh, that's a really good question. And I will happily answer it at my own risk, at my own peril. You're right.
I'm not insuring you on that. I can tell you.
Yeah. A settlement means that everyone got a little bit of what they want and no one got all of what they want. And so I think I'm speculating. The terms of this settlement are confidential. I don't know anything, but if I had to guess, if you read the writing on the wall with the underlying decision, the insurance companies were very scared. And so Merck probably felt the opportunity to resolve the issue at a relatively palatable dollar amount of settlement without having to expose the entire limit of 1.5 billion that was at risk to a second or third or fourth panel, whatever the Supreme Court was, I think in the evolution of the claim, I can't remember. They basically got to a point where they felt they were comfortable with what they were going to get and didn't want to risk taking it to another level of Supreme Court. And I'm certain that the insurance companies acquiesced to that settlement discussion because it's a very dangerous precedent to set for them on the 2017 claims. I wonder how many claims that were submitted for NotPetya in 2017 went unlitigated and unpaid without settlement that could hit the reset button if the insurance companies lost. So everyone got a little bit of what they wanted. The insurance companies lived to fight another day, and I'm sure Merck was pretty satisfied with their settlement. I did read a lot of the briefing, and a very good friend of mine at Lowenstein Sandler was one of the attorneys on the case. So I'm very proud of her for this resolution as well. You know what? The court system is not built to make enemies. The court system is built to find resolution, and ultimately these guys resolve the matter outside the court system, which is always a win.
And maybe that's why they dragged it for so long, just to force it to come to a settlement. It's part of the tactics. Don't they do that all the time? Just
It is.
drag it on and drag it on.
Always better than precedent, David. Settlement is always better than precedent.
And so everybody lived to
Fight another day.
so did they keep them as a customer, or is it
When I looked at the list of the insurance companies on the claim, like there's no way that they're not doing business with all those insurance companies. They're the leading insurance companies in the world. Everybody in the world does business with at least one of the insurance companies involved in this. So,
yeah, especially when it's such a large company, you have limited choices in terms of insurance.
correct. I've had clients, David, that have bought up the entire world's capacity of cyber insurance. So you're doing business with everyone, whether you like it or not.
Yeah. So the question is, are premiums going to go up? Like they say, okay, we're paying, but guess what?
Specifically or in the market?
Yeah, the market in general, and then specifically for
No, I don't think that this specific situation is going to change the market dynamic. It might have changed if there was a settlement that exposed the insurance companies to more or potentially less risk. But I don't think this is going to have a material impact on how the market looks at the exposure. It's a single case in the vacuum. Merck, I'm looking at all the insurance companies here who I will not name. They are all major insurance companies that probably provide Merck not just with property insurance, but directors and officers, product recall, product liability, employment practices, casualty, flood, quake, all of it. It's not just this property product, this property portfolio that sits in a vacuum, David. And so insurance companies ultimately are going to want to bury the hatchet and continue to do business.
After so many years, I'm sure these people are like, whoever was involved are like now best friends. Didn't they like just after they settled it, they must have gone to the bar?
I would assume so. I know who did go to the bar, the attorneys on both sides.
Because it's incredible. It's a journey, right?
Yeah.
This is 7 year journey in terms of litigation. And I'm assuming, again, it wasn't all, when it comes to settlement, it shows that somehow, somewhere, somebody compromised.
Yeah.
Okay, good stuff. So listen, it's been a really beneficial conversation, and I hope that our viewers are learn a lot. That's the purpose of it.
This was my favorite discussion I've had with you today, David. Thank you for having me.
Thank you very much. So just to plug yourself in, just if anybody wants to know more about this or of what you provide as a broker, just where can they find you to know more?
Yeah. You can look me up on LinkedIn, David Anderson, and my company's name is Woodruff Sawyer. We're a California-based insurance brokerage firm moving out east. We're all over the country, though. We're geographically agnostic. If you go to woodruffsawyer.com and then click on Insights and then click on Cyber, you'll see a bunch of blog posts and white papers that I write, including one on cyber physical damage. woodruffsawyer.com is the best way to get in touch with me. If you can't find me on LinkedIn, there's probably 10 million David Andersons, though.
And then I highly recommend to not try to walk the gauntlet alone.
Yeah.
This is a precarious, as we just discussed, this is not something somebody would do it on their own. It's highly recommended to do that before something happened, not after the fact.
Ounce of prevention.
Awesome. Thank you very much.
Thank you, David. Happy New Year. Good luck.
And looking forward to our next conversation.
Absolutely, sir. Have a good one.